And so now where do we go from here? But the markets are not prepared for a world where the United States fully deregulates, where the United States is no longer playing by OECD tax harmonization rules, where the United States is not, running the World Bank and the IMF and everything and all of the post World War II institutions as a means by which to do the economic hitman thing, the John Perkins thing around the world in order to enforce its hegemony. That's not what's going on. We're living in a different world.
Welcome back to Metals and Miners. I'm your host, Gary Bohm. Today, we're diving deep into the dynamic world of precious metals, geopolitics, and market strategies. I'm thrilled to introduce Tom Luongo, the founder of Gold, Goats, and Guns, where he blends sharp economic analysis with incisive commentary on global markets and geopolitics. With a unique perspective on the intersection between finance, resource, geopolitics, and power, Tom brings a wealth of knowledge and bold predictions to the table. Tom, it's an honor to have you back on Metals and Miners. Welcome to the show.
Thanks, Gary. It was a lovely introduction, probably undeserved, but I'll take what I can get at this point in time. So we'll just go with it from there. Thank you.
Okay. All right. So Tom, you're a longtime student of the intersection between geopolitics, the economy, markets, and currency. For decades, what has often felt like a movie that we're watching, you have astutely been breaking down the events, sharing your thoughts with those who would listen to help them get on the right side of history. What do you hope for those tuning into our conversation today that they'll walk away with after listening to this discussion?
That everything they think they know about the world, they don't know. And that they should continually check their premises on a regular basis, because right now we are at a moment in time where we've never seen in our lifetimes. I mean, I've been 57 years old. I thought I understood how the world works. At times, I actually even come close to figuring it out. And then you realize that when systems start to break down, they start to break down chaotically. And the old relationships that have always existed, and the phrase that the past is prologue, no longer is applicable. And we're definitely in one of those moments of time, and it requires you to be very nimble and to be, frankly, dangerous in how you approach thinking about the way things are changing. You have to be willing to question everything, including your own bias and including your own preconceptions and your just the way you even just your own heuristics. Because, and I say that not for any other reason than some days I wake up and I feel ignorant. Like I feel like I have no idea what's going on. And then you have to sit back and you have to stop creating content and consuming content and sit with what you think you know. And that's a very difficult thing to do, because we're all plugged into these phones and our things, and everybody wants an answer immediately. And I've come to the conclusion that when events happen, better to take 48 hours and not even think about it, comment on it in any substantive way other than, wow, that was terrible, or wow, that's interesting. And I'm speaking specifically now, obviously, about the Charlie Kirk assassination and all of the things that are being spun up around it, along with the fact that now we've got President Trump literally being courted around England. I think two things are happening there. And if you've seen the early images of this, and by the way, the Federal Reserve just cut interest rates by a quarter point. That's not like anything it's not like this is just your average hump day, right? But just the imagery alone from what I've seen coming out of the UK, there's two things I've noticed. One, the UK is trying to schmooze Trump and flatter him because they believe that he's a narcissist that is susceptible to flattery. And the second thing that I think is happening is that Donald Trump is offering terms of surrender to City of London because they're no longer in charge of our country. And they have been for over 250 years. And that was a long, hard fought concept to even get into my brain. And it took me 15 years worth of doing, geopolitics in public, or almost 15 years now, doing geopolitics in public since I first started working for Newsmax and years previous to that, to understand what I think is the game. And over that 15-year period, all of my old positions are gone. But the information that I gleaned along the way to get to that position, at that moment, the moment today, is all still valid. But, it all depends upon the shape of your eyes. It all depends upon the depth of your willingness to dig, right? And to question premises. And so in the aftermath of Charlie Kirk, for example, I'm watching at least 4 different sets of assets being burned to the ground to protect somebody, because somebody helped Tyler Robinson in some way, manner, shape, or form kill Charlie Kirk, either directly or indirectly. Again, all of this is fungible information. And I say that as an example of all the other things that are happening. The realignment of the United States towards Russia and China and away from Europe and the UK. The role that Israel may or may not be playing. While everybody's screaming that Israel is, the second coming of the Nazi party, maybe that's not completely true. Maybe they've been betrayed, and they're both the villain and the hero and the victim all at the same time. Everybody, from every perspective, inhabits that role, depending on the perspective you're looking at. They're somebody's hero, they're always somebody's victim, and they're always somebody's villain, all simultaneously. All concurrently, or as Tom Stopper would put it in Rosencrantz and Guildenstern Citizens Dead, concurrently and consecutively. It changes and all the time, and you have to constantly be on the lookout for when those things change. And that doesn't mean you can't have your own core belief as to what should or should happen, or what crimes you or anybody else is guilty of. But to understand why those things are happening, as observers, that's our job. Why? Because the better we do that job, the more predictive our heuristics become, and it makes us better able to deploy our capital and deploy our time in a productive manner. And that's ultimately why I do everything I do.
Well, there's a lot.
So there's a lot to unpack there, but that's the basic.
Yeah.
The basic.
Yeah. I appreciate that. Let's start with the Fed. Tom, there's clearly a historic change happening with the Fed. President Trump's economic advisor and appointee, Stephen Moran, he just took over the seat. He was there for the vote, but he actually abstained. He wanted a bigger cut, whereas everybody else voted. But soon there's going to be another one of Trump's replacements. They're going to replace Lisa Cook. Then next May, the chair, Jerome Powell, he's going to be replaced with another Trump loyalist. Here's the question. Are the majority of investors properly allocated for a complete Fed shift, this new paradigm? And if not, what are the ramifications there?
Oh, they're not. Not at all. So few people really want to even admit the fact that that anybody can actually do this with the Fed. So there's a couple of things. Let's talk about this. First things first is I don't think that Powell is not a Trump, quote unquote, Trump guy. I still hold to my argument that Powell was put in place by Wall Street to set the table for Trump to remake America, and he did so explicitly through 5.5% interest rates and the implementation of SOFR. Today, he's cutting interest rates. He cut interest rates by 1/4 point because there's no crisis in credit in the United States right as of this moment. I still would have liked Powell to cut by 50 just to shock the markets, because I just think that the markets need to stop having their hand held by the Federal Reserve Chair. If I have a complaint about Powell, and I've said this many times, and I'll continue to say it, which is that he's been way too he's been way too accommodative in holding the market's hand and letting them know what he's going to do. He's been too transparent. Like, sometimes you just want to not be. You want to have some strategic ambiguity, Jerome. But at the same time, where Powell has employed strategic ambiguity is by giving the reasons as to why he's done what he's done. He says one thing, He says he's doing it for this reason, but he's clearly doing it for another reason. And you know a man by his enemies, and everybody hates Jerome Powell. It's like you know a man by his enemies because you know that everybody hates Donald Trump. Even Donald Trump hates Jerome Powell, nominally. But, of course, Powell, by not cutting interest rates all year, helped Trump, negotiate some of the most lopsided trade deals in history. Now, did Trump really need that extra leverage? Maybe, maybe not. You can argue, we can have that conversation. I'll be happy to, pour double rye and pick up a cigar and go to the cigar bar and let's do the thing. We don't need to do it on my podcast because that's a real conversation. This is what happened. And so now where do we go from here? But the markets are not prepared for a world where the United States fully deregulates, where the United States is no longer playing by OECD tax harmonization rules, where the United States is not, running the World Bank and the IMF and everything and all of the post-World War II institutions as a means by which to do the economic hitman thing, the John Perkins thing around the world in order to enforce its hegemony. That's not what's going on. We're living in a different world. We're living in a world where the United States is perfectly happy with China and Russia going their own way, leaving Europe in the dirt. Europe has made their bed and they're lying in it now. Trump has made it abundantly clear that he has no use for the Europeans if they're not going to reform themselves, if they're going to continue to stay on the path that they're on, which is that they want war with Russia but at the same time demand that they have the right to buy, cheap Russian oil through proxies below the market rate, because the sanctions have placed such a depreciating value on Russian oil that that arbitrage, that cheap energy play can still occur and allow the Indians to get rich in the process, which work for City of London. And the UAE and Qatar and everybody else is making money off of this. And Ukrainians are dying by the thousands every week in trenches and foxholes in the Donbass. If I'm Trump, I'm putting these people on notice. Oh, look, you just want to kill people. You just like killing Slavs. That's basically what he's been saying. And Putin, for his part, has to continue doing that, because otherwise it's an existential threat to the Russians if you leave if you do not push the Europeans into bankruptcy over fighting this war. So the both of them are doing exactly what they want to do for different reasons. I think for different reasons, but the older I get, the more I believe that they're actually coordinating on this. But that's just me. But even if they aren't, even if you just take the baseline scenario that Putin has his agenda, Trump has his agenda, they both want this fixed because Trump wants out of Eastern Europe and doesn't want a war with the Russians, and the Russians want NATO permanently out of Eastern Europe, and he wants to stabilize the Balkans and stabilize the Caucasus. Let trade flow, let the energy flow, let everybody live and let live.
Let's go back to the Federal Reserve here for a moment. So, Tom, the Federal Reserve has had this dual mandate for quite some time: price stability, maximum employment. Now, Stephen Moran he's talking right. He's talking about
mandates and the 2% inflation target, which is incompatible with the first two.
Okay, but hear this. There's something new that has come out where he is now stating, Stephen Moran is stating that he's calling this the third mandate, so maybe we'll call it the fourth, but he said there's now a new third mandate, and that is to pursue moderate long-term interest rates. So how could they wield monetary policy to influence the long end of the yield curve, and what ramifications could that have?
Well, again, that's going to get down to how do we fund the government, right? You're going to get moderate long. You're going to get the Fed isn't going to. I mean, everybody's going to take that as yield curve control, right? Or acute Operation Twist 13 or whatever the hell it is. That's not where this is coming from. We're going to, and Trump has already made this abundantly clear, and so has Scott Bessent, that we're going to fund the government differently. We're not going to need to issue as much debt, and we're going to make the United States so creditworthy that people are just going to, be willing to pay, willing to buy our debt at a very, very strong premium to everybody else's. It's like, let me put it to you this way: does Apple need to issue debt? No, they don't. Why? Why would they? They have more money on their balance sheet. They have more cash on their balance sheet than most countries take in a year, right? But they still do. They issue corporate debt. You know why? Because they want a credit rating. Because sometimes it's better to borrow at point from their investors at 0.75 or 1.25% than it is to, leave the money on the balance sheet, right? I mean, they do manage the balance sheet that way, like a modern company, even though they don't have to, even though they have so much cash they could just like buy the world, right? Same thing with the United States. Think about the United States having a balance sheet that looks like that. Think about the United States having a funding model that looks like that, where we're making so much money that we only issue new debt simply because we can maintain the credit rating and we want to keep the treasury market as a reserve asset liquid, right? I think that's what Miran's talking about, or Moran, or however you say his last name. I called him Steve Miran, maybe it's Moran, I don't know. But that's what Stephen Miran's talking about, right? Which is in effect. And to get there, so I don't even consider that a mandate. What he's saying is, we're scrapping, and Powell already set the table for this. If Powell was aligned with Christine Lagarde and the rest of the BIS, he wouldn't have scrapped the 2% inflation target. That was put in place unilaterally by Ben Bernanke in 2007 on purpose, because he knew it was coming. Because that was the ultimate statement of globalist Fed monetary policy. We're going to pursue 2% inflation target so that we can steal all the real wealth that people generate on a yearly basis. We're going to steal that by inflation. That's what that means. Because all of us are only about 2% real yield on our day-to-day basis. You get out every day, work 8 hours a day, 5-7 days a week, do your thing. You're going to compound wealth at about 2% a year. Real wealth, not nominal wealth, real wealth. It used to be 1%. Now it's about 2%. Maybe it's 3% with the internet and the latest versions of technology that we have. But sometimes, Gary North used to make this argument ages and ages ago about how we're only about 2%. That something happened in the mid-19th century that doubled our productivity. It doubled our real productivity. Maybe it's doubled again since then, and we're actually 4%, and the government and the central bank's just 1/2. I don't know. I don't really care. What I'm saying is it's a model. It's a framework with which to look at. Why do they want that 2%? That 2% is their vig. And they don't want you to be profitable. So what Stephen Miran is saying is like, look, we have to pursue policy that keeps interest rates and our credit rating high, and therefore our interest rates, are the rate on our debt that the market is willing to pay, low. And so maybe that requires the Fed to be reformed completely. I've been on the record saying that I think the long-term goal of all the policies that have been put in place, the sum total of the stablecoin trio of bills and the crypto bills and the relisting of Fannie and Freddie and all the things that Trump is doing, that the goal here, and tariffs, all of it, the goal here is to set the table to re-empower the small and regional banks, to recapitalize them effectively, and to recapitalize the middle class in order to get access to consumer credit, to rebuild the middle class, and to reform the Fed such that it goes back to its pre-1935 mandate, Banking Act of 1935 mandate, which is to be a backstop of the commercial paper market, domestic commercial paper market, and an international enforcer of the value of the par value of the US dollar, and nothing else, and get out of the treasury market. That is a major, major, major shift. No one is prepared for this. People listen to me and they say, wow, Tom, you're a lunatic, but you're onto something. Fine, great, I don't care. You can call me a lunatic all you want. My wife does every other Thursday. It's not a big deal. The point being is that, and I do so on every other Friday, or every third Friday. So my point being is that it doesn't matter. What matters is that people are beginning to think about this. We're way out on the lunatic fringe here of the Financial Commentariat. The standard Financial Commentariat is, low rates bad, low rates good, high rates bad. Weak currency bad, strong currency good. Really? And the answer to both of those things is it depends.
Well, let's stay on this topic, because I think what we're definitely talking about is currency debasement. And when the world's reserve currency is being deliberately debased, there's few alternatives for storing value. Gold becomes the default choice for central banks, for sovereign wealth funds, international investors who are all seeking to preserve their purchasing power. This is already happening. Rick Rule, who we all know, he has pointed to the U.S. debasing the dollar by 75% in the decade of the 1970s. And he believes that they are doing the same thing in the decade ahead. In fact, President Trump has been speaking on a lower U.S. dollar since he came into office. It's declined by about 11% this year alone. And now the U.S. dollar sits on this resistance level that is held since 2008. If that breaks, it likely has a long way to fall. What is your thoughts on the U.S. dollar?
My thoughts on the dollar are that when there's a crisis, when there's a financial crisis, money, I believe I'm with Martin Armstrong. That money runs towards the center of the world, not away from it. I mean, I love Rick, I do. Very smart guy, really do. I mean, I have a lot of respect for Rick Rule, but the standard analysis of, we've been in a monetary tight situation for 5 years now, or 4 years now, since 2021. Now, we've taken back only a half or two-thirds or whatever, 60% of the money that was printed post-COVID. That had nothing to do with the Federal Reserve. This is where I get angry with my quote-unquote libertarian or Austrian brethren. I get very angry with them because they always want to blame the Federal Reserve and they never want to blame Congress. Well, they only want to blame Congress when Congress passes a bad gun law or this, that, or anything else. They forget that Congress is the one that appropriates all the freaking money. And then the Federal Reserve is left holding the bag. And then they turn around and say, well, the Fed could raise interest rates and stop all this. I'm like, yeah, and if you did that, then the first thing you would do is scream that the United States is going to go bankrupt. You're not going to stop Congress from appropriating money. Like I had this argument with Peter St. Onge the last time he was on my podcast, and we got into it a little bit, gleefully. But Peter and I were both, we walked away from it's not like we were angry with one another. We were on opposite sides of this, and he kept bringing up, he's like, no, the Fed could have stopped this. Caitlin Long has said the same thing. I'm like, yeah, really? Like, I don't know what political world you live in, but I don't see that happening. The only time the Federal Reserve has ever been able to really stand up to the Eurodollar system was when the United States was literally about to explode during the Volcker years, and then the Carter administration was issuing Swiss franc bonds. I'm sorry, but I know you. I like you guys. I love you guys. You guys are great. You're wonderful guests. I consider you friends. I consider you trenchant analysts, and you know damn well that the Federal Reserve, when push comes to shove, is going to be forced to eat all that paper because Congress told them they had to. Because their first and only rule is backstop the Treasury market. They don't have that power. They have the power to tinker around the edges. But at the end of the day, if the Congress is going to go hell-bent and spend $12 trillion, I got news for you. The Fed has no choice but to monetize it. Or did you not remember the freaking CARES Act? Where literally I made this argument and people are yelling at me that Powell should have stood firm and told Trump to go scratch over the CARES Act. I'm like, oh yeah, exactly. That would have been done. Do you know what would happen then when the Treasury market seizes up? I got news for you. Even Donald Trump, at that point, everybody would have been like, oh, that's it. Get rid of this Fed. Get rid of this Powell guy. Not nationalize the Fed. And then we would have had MMT. Everybody, there's politics is the realm of the possible, not the realm of the philosophical. And while I agree with the position, the Fed should have stood up to Congress, but they stood up to Harry Truman. This is the classic kind of libertarian thing. They stood up to Harry Truman against the Vietnam War, against the Korean War. I'm like, yeah, because that was easy. We had just finished fighting World War II. Okay, it's a different time. Like they locked the freaking country down. They destroyed an entire generation's ability to perceive reality. Like we are in a different freaking world than the 4 or 5 years after World War II. Sorry, completely different environment. Now, that being said, Powell has done what he's needed to do to try and get the finances back under control. I personally, I understand the argument about, hey, we have this massive inflation coming. My friend Dave Collin believes this. I've argued this strenuously with Dave on multiple podcasts. Rick Rule and others are all making the same argument. I keep saying to you, and I led this podcast off with that discussion about reframing and about being flexible. It's important, while you may have a perception and a position on something, to go out and do the hard work and reframe that from 90 degrees different direction and say, what if? What if we've already been through the 15-year. What have we already been through the 1970s? I know, nominal growth with no real growth, no stagnant wage growth, massive inflation. Gold has gone from $1,000 in 2015 to $3,800. Gold bottoms at 1056 in December 2015. We're $3,700 today. I mean, where does the greed of gold bugs? And I'm one of them. Like, it's not like I'm selling my gold here or anything, but I'm just like, when is enough enough? You're up 370% in 8 years. You've got a 25% ROI. You're hitting this rule. You're doubling your money every 3 years under the rule of 72. I mean, you're beating the S&P 500 for 10 years running. Why, maybe this is your blow off top. Maybe, just maybe, everything you thought is going to happen has already happened. And the only reason it looks the way it does today is because we've had a bunch of communists literally bind our economy down with arbitrary lead balloons that we can just cut the cords of and watch them fall off of us and stand up like Gulliver and go, it's time for me to squash all the Lilliputians. And lo and behold, y'all said that the tariffs were going to destroy the economy, and now the Atlanta Fed's saying 3.7% GDP growth. And we're getting wage growth, and we're getting this, and we're getting that. So, sorry. And maybe we're getting maybe we're going to keep 3% inflation. But where is the inflation coming from? It's coming from choke points within the economy that were artificially created. Healthcare, education, the massive build out for AI and data centers. Electricity prices are spiking. They stopped us from building more natural gas pipelines to bring cheap energy out of the Permian and everywhere else to our homes, to heat our homes and run our businesses. Because why? Because communists. Like, maybe if we get rid of the communists, we may grow. And we may grow at 6%. I'm just like throwing a number out there. Like, just like I threw 6% out about interest rates 4 years ago and said, if I was Powell, I'd raise rates to 6%. See what happened. I just picked a number out of my backside. Yeah, 6% looks good. Let's try that one. Lo and behold, I was right. We were able to hold 5.5% under SOFR for a year and a half during a banking crisis. Of March in 2023. Maybe the United States economy is better than everybody thinks it is. Maybe we're all being gaslit by morons. Maybe we're all just talking our book.
Let me ask you this, Tom. So, a lot of folks believe that the market is overpriced. There's many metrics that you could point to that show that the market's overpriced. There's a lot of people in the bottom 60%. Of consumers who are facing tough hardship situations. We're seeing a lot of metrics point to things that we haven't seen since the 2008 crisis in terms of metrics. But as far as, the GDP, like you're talking about, the Bank of Atlanta just, showed that they're projecting 3.4%. So we've got this delicate balance between an overpriced market, a hurting consumer in the bottom 60% versus a top 40% who owns the majority of the assets, who's doing very, very well. The administration is trying to walk this tightrope. You have countries who are net settling in gold. They're wanting to buy more gold instead of buying treasuries. That's putting some pressure there. So that you have all these different things that are happening, but there's many levers. A lot of people are worried right now that the economy is going to implode. We're heading into recession for all the reasons, that have been mentioned. Maybe we're being gaslit. Who knows? I'm just saying there's a lot of people who are worried. So let me just get to my question. There's a lot of levers that the administration can pull to keep the economy growing with the, and admittly, Bessent has been out there saying, our focus post Doge is, growth is we want growth to be faster than debt, right? Than the growth of debt. So with midterms coming next November, do you believe that the administration is going to pull every lever that they need to ensure that the economy does in fact keep growing at a faster clip than the debt, and therefore stimulate an even bigger stock market bubble or maybe housing bubble, or maybe who knows what bubble that already exists.
Yeah,
And
I get where you're going. Are they?
but the last part
is the number is the word bubble? Is that fair? No. That's where I'm
but
going,
the last part the last part about that though is with gold having reacted positively, in this fiscal dominance regime that we've seen over the last 18 months. In that environment that I just described, would you expect gold to continue to react positively?
I'm not a big fan of the whole gold equals inflation equals this equals real positive interest rates or any of that other nonsense. I believe 90% of why gold moves the way it does is because of geopolitical unrest. Gold doesn't do anything when the economy is humming along. When the demand for money and credit are in balance with the supply of money and credit, gold languishes, and the powers that be, or the whatever you want to call them, the guys on the Crimex, or we all know who we're talking about here. We're talking about these guys are all my friends, and I say all of this stuff with love. The Craig Hemkes and the Peter Schiffs and all the rest of them. They're not, well, Peter Schiff's not my friend, but certainly Craig is. And I love those guys, and they do perform a very valuable service to explain to people just when and how the market is being, when the tape is being painted on the market, on the gold market, certainly. And you can talk with my friend Vince Launchy, or Brent Johnson, or anybody. But at the end of the day, gold makes big moves on geopolitical unrest and then holds on to those gains. Because during geopolitical unrest is when everybody gets religion about, oh my God, I need the return of my money, not the return on my money. And they go to ground. Money goes to ground. And then people don't want to give that. Once they've gone to ground with gold, they don't want to give it back up again. Because at that point, it's not really a trade. It's now savings, and they just put it away. And they're like, you know what? I accumulated that. I'm up on it, and I'm good. And I'm going to hold that there as my thing. And that's what happens. And so gold goes up in fits and starts over the course of time. Rarely do we have the kind of sustained rally that we've had over the last, year, like this, from 2,600 up to 3,700. And even then, there was a 3-month lull. And that 3-month lull coincided with the end of the 12-day war between Iran and Israel. And now, the European Union refuses to stop trying to go to war with the Russians. And gold is doing the creeping up higher thing. Oh, and yeah, the Federal Reserve is cutting interest rates, which is lowering the real yield on treasuries and blah, 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 blah. Agreed. And so now you'll get a different class of people come in and want to put some money into gold. Like, everybody's into gold for different reasons, right? So the gold market, to me, is far more complicated than anybody wants to make it out to be. I think the gold community does the best job. I don't know. They just, it's a more complicated trade than the one most people want to hear. And so if you start there and you look at what's happening in bond spreads, and you look at what's happening in bond yields, and you look at the potential for a sovereign debt crisis occurring in somebody else in a large economy's bond market, Germany, for example, the United Kingdom, for example, not the United States, yeah, I can see gold going higher. If the economy starts to take off, stocks are going to be where it's at. The Dow is only up 7% this year. Okay. Now, part of the reason why the Dow is only up 7% is because, well, it had overhead resistance at 45,000.
Didn't the S&P?
The Dow is the broad marker for global capital flow. But we have emerging markets where are up almost as much as gold is, over 27%.
But didn't the S&P have a huge, one of the hugest gains this year after the tariff scare in April? It was either the S&P or the Nasdaq.
After the tariff tantrum, sure. I mean, from the bottom of the tariff tantrum back to baseline, sure. But from the beginning of the year to the end of the year, no.
Gotcha.
I mean, from January 1 to today. Now, is the Dow outperforming the European markets in Q3? Yes, barely. I check all this stuff on a daily basis. Like twice weekly basis for the patrons. I put up the Dow chart and I compare it, the monthly, quarterly, and annual return to date of all of the Dow versus the DAX, the Nasdaq, the Eurostoxx 50, the Nikkei. Emerging markets is defined by EEM, the BlackRock ETF. And I look at them all. And then secretly, I also look at it versus the Russell 2000, but don't tell anybody. So trying to get an idea of what because they all mean different things, right? And they're trying to get an idea of what capital's trying to do and where's it want to go. Now, as of right now, like, we could grow out of this and the Dow could not do much. The Dow is a huge sink. The Europeans are putting up capital controls left and right. The money might not be able to get out of that wants to leave Europe might not be able to get out of Europe. And it might just all get destroyed and be a massive deflationary. But of course, we know that they don't want to do this. What they want to do is institute the digital euro and reflate the whole thing. And if they do that, they're going to repudiate tens of trillions of sovereign debt over the course of, say, the next 2 years or 3 years. Are you kidding me? Where do you think the Dow is going to go? The Dow, that's a bubble. The bubble will come from that. It won't come from, I mean, if we do 2% real growth, right? 4.5% growth over 2.5% inflation, 2% real growth in the United States. What's going to happen to the PDEs on the S&P 500? They're all going to drop, right? They're all going to drop, especially if rates keep coming down and people are happy with the. At some point, everything is going to attenuate. I'm not saying, by the way, that the market isn't overvalued. That's not what I'm saying. Now, don't take that for some kind of defense of the Dow at 46 grand is, and an S&P and a Schiller PDE of 30 is in any way, manner, shape, or form rational. But it's the world we live in. And it's the buckets of where the money can go that matter. And if you start to see the $15 trillion worth of sovereign debt in Europe collapse, like, where's that money going to go? Christine Lagarde is not going to be able to hold that money from leaving. That money will flow into Bitcoin and out again. It'll flow into Tether and out again. It'll flow into gold and out again. People will be moving wealth in the back of their Lamborghinis, or they'll be buying Lamborghinis and taking across the border. They'll be buying condos in friggin' Naples, Florida for twice the friggin' market value, and be done with. That's what they're going to do with it. It's what they always do, especially with a weaker dollar. The euro at $1.18 is the worst thing imaginable for the European Union right now. It's absolutely the worst. They're staring at a 25% tariff plus a euro that's literally 25%, if not 30% overvalued. And that's why the Germans just laid off 125,000 industrial workers last month.
That's awful. All right. So before we wrap up, I want to ask you a question regarding Venezuela. Okay. So, Tom, when Trump first came in office, he had a strong focus on Greenland and Canada, right?
Yeah.
To be brought into the umbrella of the U.S., and a lot of that was being postulated. It was about the mineral wealth of those countries. Today, he has sent this massive military buildup to Venezuela over what they say is drugs related. But Venezuela has massive energy and mineral deposits as well. With the global battle over minerals heating up, do you believe that this is the focus of the Trump administration, or do you think it's drugs, or do you think it's something else?
I think it is not about the oil. I think we don't give a damn about the oil in Venezuela. We don't. I mean, maybe Chevron does, because they lost their assets down there, because they're the ones that want that sludge that they have down there, that number 6 sludge you can't even burn in a friggin' in a VLCC. Like, okay, fine. Very large container cargo ship, VLCC. No. Canada, Panama Canal, Greenland, it's all about Fortress North America, or Fortress Western Hemisphere. The United States' foreign policy is very explicitly now. They're repudiating the 2018 NDAA, which was National Defense Authorization Act, that was re-upped in 2022, which Tulsi Gabbard was all against, and apparently so is Pete Hegseth and Donald Trump, because they are realigning. They said, we are not going to spend our time at the Department of War preparing for a two-front war with Russia and China. We are now going to prepare for creating Fortress Hemisphere. That means China, you don't own the Panama Canal anymore. China, you don't get to import fentanyl through Vancouver. Canada, you don't work for the Crown anymore. We want the Arctic. Denmark, they hate you in Greenland. They love America. No, that's ours. Venezuela, you don't get to run drugs for the Russian mob or some mob that's out there that literally works for the Crown of England. No, you don't get to run your new synthetic form of fentanyl that's 100 times worse than fentanyl. Okay? Maduro? No. Depends in many ways. I love Sergei Lavrov, but no. Like that one, that takes an awfully Maduro and Chavez both are.
So
the whole situation in
essentially,
Venezuela is nonsense. Yeah, would we like the oil? No, we'd like Venezuela to actually like pump oil again.
so
But,
essentially,
but we're
if
not
I'm
going to pump oil
understanding,
and send it, we're not going to sell it to the freaking Chinese for nothing, and we're not going to allow that to prop up the narco state that is the Maduro regime. Sorry.
okay, so
that.
basically, it's to ensure that for moving forward in this new global alignment, that the Western Hemisphere is basically under American control. We flush out any, we'll call them enemies. We'll flush out any enemies, and we'll flush
out the enemies, which are mostly European and colonial, and we will deal with our rivals respectfully. And our rivals are Russia and China.
But we won't allow the rivals to be in the same hemisphere, which would weaken.
But the Chinese are okay with that. They don't need to be here.
Yeah.
But they're not stupid. Like if we give them the Panama Canal, if we give them the ability to import fentanyl in from Vancouver, while aspects of the CIA are working with MI6 out of Hong Kong to destabilize China, we deserve that. If we stop doing that, they'll stop doing it. And we can just, or maybe they won't stop doing it. We can smack them in the face once or twice.
Maybe have a little day. It'll be easier to have a détente between
of course
the two.
It is. I mean, like I've been saying for close to a year now. My friend Alex Craner and I have talked about this many, many times. And it was, in many ways, it was Alex who brought. I think it was Alex that brought it up originally. I can't remember, but he and I were like spitballing one afternoon on somebody's podcast. I said, Alex, I think we both kind of like were bandying back and forth. So I'm gonna cop to. I'm not gonna say who came up with the idea first. But we both at the same time kind of went in the same conversation went, what if you take the globe and you spin it away from the classic projection of putting Europe at the center of it, because it's the most interesting map from a geographic standpoint, and spin it to look at and make the center of the ocean the center of the Pacific Ocean, roughly where Hawaii is. And then you look around the edges of that map and you see the three most important powers in the world: Russia, the U.S., and the United States, Russia, and China. Notice India is not on that map. Notice the United Kingdom isn't on that map. Notice Australia does not matter. Or if they do, they're a very minor player. That's the alignment we should be looking at. And Trump has been pushing India away from the British. Their old colonial roots to the British. And the British have been trying to prop the Indians up and make them into a thing forever. And that's why we're being invaded in Canada and the United States, why all the mayors and all the CEOs are all Indian, and why the H-1B visa thing and everything else. That's all a British psyop, dude. That's all pushed by those people. I'm dead serious, because then they use that as a means by which to then turn around and decolonize the United States, and you turn them all into whitey hating. Like I'm done, I'm almost like at the point where I'm going to start to sound like a freaking neo-Nazi, but I'm not. Like, you can see the strategy, because this is what they did, and now we're going to say no, and we're going to kick them all out, and they're going to go home. The Indians are not they're not a world power. They LARP is a real power because another power was behind them, propping them up. Same thing with Brazil. Brazil had a chance to become a global power, and they put Bolsonaro in jail. Lula was put in place in order to maintain their colony over Europe's colonial control over Brazil. Brazil and India were the means, and honestly, and South Africa were the means by which for old colonial Europe to continue to have their hooks into the quote unquote BRICS. Strip those three out, and you're left with Russia and China. Add the United States to that, and you don't have BRICS, you have ARC. And I'm going to leave you with ARC. Okay. Subscript I, subscript S. ARC. India, South Africa, Brazil. None of those matter. Those are all subscripts. Those are all postscripts. Those are all footnotes. Because those are the real powers of the world. And that's what Europe is desperate to stop. And 90% of what you see in the financial press, what you see about gold, what you see about geopolitics, what you see about everything, Everything comes down to that. And I'm this serious when I get into like Israel and all of it. It's all tied to this. And the role that Israel plays is a complicated one, which we don't need to get into. But what's important to understand is that it's part of the story. As that story is presented to you, all I've said at the beginning was the truth. You don't know anything. I don't know anything. Whatever I think I know is only half again better than what you think you know. Because this game is deep, it's strange, it's changing every day. And everybody's backstabbing everybody else right now. The British are backstabbing the Israelis are backstabbing this one, they are backstabbing somebody else. The French are backstabbing the Ukrainians are backstabbing the Americans, the Russians are backstabbing the Chinese. Like everybody's doing a little bit of everything. Okay, because the board is unsettled. Like, and if you've ever played like a six-player area control game, you know what I'm talking about. Where you're like, I'd be at diplomacy. My favorites are like diplomacy and Dune and whatnot. But I've seen this in games of like dry Euros, like power grid, for Christ's sake. We're all stabbing each other in the back in order to keep each other from like building a power station in that one spot on the board because it's the linchpin to all of our strategies. And then we're sitting here literally screaming at each other. And I'm telling you, it's real. And if you can see it at the gaming table, you can imagine what it looks like at the geopolitical level. And then filter that through a complicit media and an overlapping psyops within the information space with AI and everything else at this point. Like, it's no wonder we're all nuts.
All right. Well, this has been an incredible discussion. I just want to welcome everyone who's tuning into this fantastic interview with Tom Luongo, founder of Gold, Goats, and Guns. Before we wrap up here with Tom, I just want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join the quickly growing community and receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report. I'm positive you've been enjoying the conversation that Tom and I have been having. Please let him know. Hit the like and subscribe button and leave a comment below the video. Tom, would you share a key takeaway before we wrap up here that you want viewers to keep in mind about today's current situation, economic, market, monetary, whatever you feel like, and then let everyone know where they can learn more about your work and how they can connect with you?
Sure. The takeaway here is I think is literally what I said at the opening. It's just that, dudes, if you're confused, you're not alone. Like, it's a tough world out there. And if you think you know what's going on, you're overconfident. And I mean that sincerely. And the older I get, the more I, really do believe that I have to constantly check my premises on a regular basis. You might have gotten, for example, people listening to this, and they're like, "Oh, Tom, you're 3 years behind. I figured this stuff out ages ago." I'm like, well, bully for you if you did. And I'm glad you did. And you should share it with your people around, and whoever your people are. Great. And if you want to share it with the rest of us, outstanding. I'm doing my best to try and figure out where we're going. People like Gary are doing this best to get, but at the end of the day, always leave it open that you may be wrong about all of it. I wake up every day worried that I'm going to wake up to a headline that literally the whole thing collapses. The whole edifice of what I think I know collapses. And when Charlie Kirk was shot last week, that happened to a lot of people. Okay. And if it happened to them, hopefully most of them will get the right message. But the point of all of the overlapping psyops that I've been talking about and the gaslighting is to rob you of your reason, to direct you towards a false conclusion. And I don't care if it's Jim Cramer on Bubble Vision, who's easily a cartoon at this point, but there are others who look like good people who are not good people. Okay? Or who are good people, but haven't updated their premises in so long that their information is stale. I try to keep it as up to the minute as possible while still keeping my eye on the prize. I don't know if I'm always successful at this, but this is the beginning of the 9th year that we've been doing this under the rubric of Gold, Goats, and Guns. Literally, we're going to publish issue number 97 of the newsletter this month, which you can get if you go to Patreon and support us over Patreon at Patreon/Gold, Goats, and Guns. It's $12 a month. Annual subscriptions are 15% off. I mean, I don't know how much, at the end of the day, follow me on Twitter. and we'll have a good time, and we'll try and figure out we'll try and figure this stuff out together. But bring your A game, because because I'm always going to try and bring mine, and that's the way we get better at this. Because bringing our B game, well, that's how we get Ursula von der Leyen and Kaya Kallas and Elizabeth Warren, and I could go on. AOC. Well, that's if you bring your D game, you get AOC.
All right. Well, Tom, I really appreciate you spending time with us, for coming on to Metals and Miners, for being generous with your time and analysis and ideas. It's always fantastic spending the time with you. I look forward to having you back on sometime soon. Everybody else, thank you for watching. With Tom, I just want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join the quickly growing community and receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report.